The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
Trading Hour, and looking at a few things right now. We got the S&P is just screaming along. It's up right now 15 points on the day with just really a perfect moving trend. And looking on over at the Nasdaq, up 16.25. We got the Dow up 10.8, and I'm sorry, the Russell up 10.8, and the Dow up 90, 93, 91, 90 points, depending upon when you read it off there. Looking for triple digits on the day. We'll see if that'll go ahead and finishes out strong. And let's see here. Looking over at gold, it is down about 10 points on the day. And then we can look a little bit deeper and see we got silver. It's currently down 0.356. Massive move down there. Copper down 0.0695. We got oil currently just down 24 ticks. We got corn is down 3. Soybeans down 4 after that massive run yesterday. Euro dollar down 14 pips. Pound dollar down 58. Aussie dollar is down 51. With the euro yen up 38, the pound yen up 12, the U.S. CAD up 41, the U.S. yen up 47, and the U.S. franc up 49 pips on the day. So, like I said, there's a whole lot going on. Let's go ahead and check out these deviations. There hadn't been just a massive amount of news, but let's go ahead and look at it and pull them up so I can walk you through it step by step. And we'll just see how big are these moves compared to expectations of the underlying market. Are they huge, or were they actually expected? So if I pull this up right here, I got the S&P. You can see 1644 was the expected movement. That's a one deviation move, and we expect that it will contain the market 70% of the time. So, and we're sitting, right there at it. I mean, maybe a point or so above it. So, do you keep buying? You probably want to be a little careful. At this point, once you've moved a deviation, that really is the expected move. I'm more about trailing my stops than I'm about adding into a position whenever that comes up. If we scroll on over and we check out the Russell, and you can see it also moved up right up there. I mean, just almost nicked a deviation. It's pulling back right now. Hasn't decided if it's going to go back down to 0.7, 0.5, or go ahead and hit 984.3. to finish out its deviation move for the day. We can check out the Dow. Dow moving pretty strong right there, but not even an entire deviation. So as big of a move as it is, it wasn't really more than what the market said would happen. And what do I mean what's expected, what the market said would happen? Well, these deviations, what we're doing is we're actually pulling the implied volatility, okay, out of the options market. And implied volatility is a really fancy word for expected move. And the option price actually has the expected move built into it. Okay, and so obviously it could move more, it could move less, but the expected move, the consensus among market participants is that it'll, move that distance. So, like 51.67 is basically the expectation. So notice how it slows down as it's getting on up there. And we can go over, let's check out the NASDAQ. So on the NASDAQ, we got to move. We've hit 0.7. We haven't even quite hit one deviation. So the big difference in today, of course, it was just a really clean trend. So as you're trading this, I mean, everything was just moving, like I said, very, very smooth all the way. If we go back and pull up the S&P again, I mean, you can just see, it just ran up perfectly for you to be able to take advantage of that trade. And looking for that, 3-tick breakout, we can see, right here. We got one shortly right after the market opens and breaks 3 ticks above the previous bar's high, okay? And, let's see, I don't think that one was 3 right there from where we're looking at it. Yeah, so right here, right about 940. So you get an entry, and then now you got to manage your profit. And managing profit gets tough when it's just flying, okay? So it's flying on up right over here, and you can see we can move that stop along the way. So right here. And then we're going to have our stop loss about 5 ticks down. So if we're at 16, 30 point, what is that, 0.5? So 0.75 there. And just zoom in on it. So 1630.75 puts us down to 1629.25. So right here is where the stop loss is. And then as it's moving up, okay, we close above a deviation. So we're going to put that one, 5 ticks below that. So the low is 1637.5. So we're going to go ahead and put our stop at 1637.5. Yeah, so 1636.25. So just right in here, got your stop. And it closes above yet another deviation level on this one. So you move that one on up. And we literally just keep going. Closes above another deviation level. So right here, this is the 1 deviation level, the strongest one. And so 1645.25, that puts our stop at, let's say the low, 1643. So that puts our stop at 1641.75 at the moment. And so that gives us our trailing stops based on the deviation levels. And again, we post these every evening around 8:15 Eastern Time for the upcoming day based on the implied volatility in the market. And so you can see right there each level posted, and you just draw them on your charts. And you can use them for whatever market you're trading. And so as it's flying on through there, what else can we do to tighten our stops? Is there anything else we can do to tighten our stops along the way? Well, the first thing I always look for is an RSI divergence, so peak to peak right here. And then I'll go down here and I'll find the same point. And I'll go, okay, what happens if I draw to this same point? So, well, my RSI is 75.57. My RSI over here is 74.09, so no divergence. I can go ahead and just get rid of that one. And so there's nothing there that helps me trail the stop. It's going on up. Now I got another one up here. I got a couple more peaks. So let's see if we get a divergence up here along the way. And so I can go from this point right here to this new peak. And then come down here. Take the same point. Okay, so right there. And then to this bar. And we do have an RSI divergence. So since there was a divergence there, we can actually move it up to 5 ticks below the low of this bar. That's 1644.25, so that sticks us right at 1643. And then we got another pullback and new high. So right there, right? So the market pulls back, and then it breaks this high right here. So on the close of that bar, I can go in and go, okay, well, do I have another divergence or not? So on that one, nope, no divergence. So I can't tighten my stop again. So right now we're literally just left waiting at the moment with a stop right there at 1643 on ES. And very simple method, very effective method. But you put the pieces together, it allows you to let your profits run. And I mean, you have a defined stop. I mean, yeah, you're going to give up a few points, maybe a point, maybe a few ticks, depending upon what it is you're trading, cents, whatever, when you use this method on your profits. But the amount you give up should not compare to the amount that you're able to capture by having an objective, let your profits run method. Okay? And so with that, that wraps up the indices. And now let's go ahead and look at our metals. So over here on gold, we can see that it moved on down to 0.7 right down here. Came back up to settlement and sort of hovering at 0.5 at the moment. And it's been a crazy volatile day, but there's been some really, really good trades. Some good setups along the way. And, just looking at some of these right here, but like right there, just seeing the market pull down, pull up. So been some good trades along the way. Also, we can go in, we can check out silver. So on silver over here, then, we got to move down all the way down to 1 deviation, but it really, just sort of stopped there, man. Like slammed through it, and then it paused right around that level for about 40 minutes, and then started pulling back up and letting off, but had that, that perfect 1 deviation move that we're looking for on a daily basis. And hopping on over to copper to wrap up the main metal markets for the day. Copper, it just sweet, perfect trend. Moved on down, hit the 1 deviation, hung out there for about an hour, and then decided to go ahead and hop on down to the 1.5 deviation level on top of that. And, that can be really hard to manage your stops whenever, something's moving that slow. So let's look. What have this been? Highs, 31.05, ticking in basically 0.005. So 25 above that, 31.30. So that would put our stop right up here at 31.30. And we got a high on this one at 31.30. So did not break our stop, and we're still going. So got to stop right here. And it closes down again. So we got to stop right here. And as we move on down, waiting for it to get rid of that price alert. Moving on down here, and let's see if we get it. So we don't have another stop down here for closing below the deviation, but along the way there were plenty of opportunities to tighten your stops. As far as this morning, depending on what time you got in. So let's say you got in the early morning hours. I mean, if you didn't, you sort of missed the move, right? So copper basically went flat most of the day, and you know that. I mean, you just look at this, and not only do you see the move, but I mean, you're at this part of the chart. You wake up, you're like, wow, this thing's running. You have no perspective. What do I mean? Like, how big of a move is that? I mean, you see a great trend. I mean, should I hop in now? And then you hop in, and then this happens, right? Well, knowing that we're past one deviation, we're at 1.5, that should give you a little perspective. So you should be looking back and going, if I was in, where would my trailing stop be? Well, it would be up here. Okay, so do I want to hop in right here? Sort of waiting on this thing to close below before I can trail my stop again on the deviations. And I haven't been able to, and so I avoided the chop by having a perspective of how far the market moved, not just, hey, it moved, I want to get in. And that's one of the things that I like. I talk to traders about. They say that they almost feel blind without them once they start using them because it gives, like I said, it just gives them perspective of movement. It's so easy, especially as you're resizing your charts. You're making them bigger, you're making them smaller. How big is that move really? And it can be easy to lose your focus, your perspective. I mean, you zoom it in like this, it looks huge. You zoom it out, it doesn't look like anything. So your zoom and everything else can sort of mess up that perspective, and so the deviations keep things in perspective for you. And let's go over here. Let's check out. We'll go into corn and soybeans. So on corn, we got a nice move right down, just tipping right there on the 0.7 before pulling on back. And, you would have had it stop right here, right above this level. And it pulled on back up. But nothing major, and but I mean a decent little trend in the morning there. And then we can hop on over to soybeans. Now, soybeans yesterday, I mean, it was just taking off. But soybeans today, I mean it just dropped. So it doesn't look like a big move when you're looking at the basically the current market net change summary. But I mean that thing went from 14.26 all the way down to 14.05. So I mean you're talking a 20-point move. At $50 a point, that's $1,000 move. That's a decent move, So had $1,000 move, and was that a deviation? Well, from top to bottom, yeah. So, and that's one of the things I try to enforce people when they're looking at length of moves, is to go look at the top to the bottom. Don't just look at the deviation level for when you're looking at expected movement. And that might give you an idea of, hey, you know what? I'm approaching right now a full deviation move. And I should expect definitely oscillation off the deviation level, but I should be aware when I'm at a deviation move from high to low. All right, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so we got Glenn from San Francisco, man. How's it going, Glenn?
Good. How are you, Darrell?
Hey, doing great.
Hey, I wanted to ask you about the ES this morning and how you would have entered on the Nadex platform using your deviation levels. It had a small pullback this morning, about a 382 around the 1631 level. I didn't take it. I thought it would pull back further, and then it just took off. So I'm curious, using your deviation levels, how you would have entered and how you could have gotten in on this rally.
Well, what I did this morning is whenever it pulled back, it was bouncing off the settlement level. Okay.
Okay.
So I can say that one of the deviations, and often basically that's a gap fill. Okay. So the market opens up, and then it pulls on back off that. And sometimes that gap fill will happen like right at the open, which is what happened this morning. I mean, it just went down and nailed it. And often what will happen is it'll bounce right off settlement as soon as it touches it. And what I do is I enter when it's a few ticks above the previous bar's high. So we get that move down. I want a little momentum in my direction. Okay? So when it goes a few ticks above, then I'm getting in, so right here. And then I'm putting, if I'm doing a stop loss, I'm going to put a trailing stop, say 5 ticks below. Or if I'm using like an at the market spread in Nadex.
Uh-huh.
And I don't know if have you seen that yet? Do you know what I mean when I say at the market spread?
Yeah, I've not been on the Nadex platform. I've been to your seminar when you were here in San Francisco, and so I understand what you're saying.
Yeah, exactly. So like right here, like an at-the-market spread, like here in the scanner, shows you like any spreads that are within 10 ticks of the underlying market. Okay?
Okay.
So, because there'll be a little bit of premium there. I like to trade at-the-market spreads if I can because my risk is very low on, whatever trade I'm choosing to do. Like there's a $13 risk, $85 reward, and it doesn't have to move that far. And I even like it to be lower than 10 ticks. A lot of times they're maybe like 5 ticks when I place the trades. So, these right here are 3 ticks away, like on $1, But I'd buy on that trade, and then I trail my stops all the way up. So the biggest key on the deviations is, one, it can help you for finding a good entry, like a pullback that hits that and then takes off is often a very solid entry. And then the other thing is, trailing my stop. So every time it went above, if I went over here, I'll pull up the 10-minute chart for you on ES. So right here, every time it closed above the deviation levels, then I put my stop 5 ticks below that deviation level. So, or the bar that closed above it. So this bar right here at 10:10 Eastern time closed above the deviation level of 1637.5. So what I do is I go in and I actually put my stop 5 ticks below the low of that bar. And then right here, literally just 10 minutes later, this bar closes a tick above the next deviation level. So I put my stop 5 ticks below it. And then right at 11 o'clock, this bar closes above this deviation level. And so I put my stop 5 ticks below it. So by doing that, I'm able to trail my stops. And when I say trail my stops on Nadex, what are we doing? Because obviously, they're all limit orders. We talked about that. And,
right.
When we're out there. So if I go over here and I grab, I'll just throw on one. So I go in and I buy this contract. Okay, so we'll say I just throw that one on there real quick. Then I'm going to have an out-of-ticket window. So there's a little tab right next to the chart where you can click on that, a little chart icon in your open position. You can choose tear off ticket. And when I do tear off ticket, then if I bought, I'm going to sell, right?
Right.
Make sure my quantity matches. So I'm going to change that right there to sell. And then, so looking at the chart right now, and I go, okay, well, what would my stop be at what's my stop at right now at this moment? Just based on the deviations, not using the RSI and all that, but just using the deviations. Low is 1643, so 1642, 1641.75. Okay? So I know I'm going to want to get out of this trade if it hits 1641.75. That's the underlying market, right?
Right.
Okay, and I got to trade based on the underlying market. I can't trade based on the spread. It'd be like trading a call or put based on, the call or put chart versus based on Apple,
Right.
So I'm trading based on the underlying market. And then what I like to do also is, just to make it really simple, is I subtract like 15 ticks. All right? And I'll show you why. If I go in and, 15, by the way, Nadex ticks in 0.1 on ES. So if I go in and subtract 15 ticks from that, that'll be like 1640.2. And so if it hits this price, okay, if the S&P comes back and it hits my stop price, if you'll stay right there, I'll show you exactly why I do this and how I do it. It makes it a lot easier to trade it.
Okay.
All right, hold on right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. We got Glenn on the line. We're talking about Nadex and trading with deviation levels. You there, Glenn?
Yes, I am.
Awesome. All right. So first, I'm going to go into this auto ticket thing for you here in just a second, but I want to make sure we do a recap and that you are following along, because I know I have a little bit of a tendency to go fast sometimes.
You do.
So first to do the recap is, one, I expect the market to pull back like to settlement off, like in most days, especially if this is in like a couple points, the gap's going to fill. Okay.
Okay.
And I'm not surprised to see it take off from that point. Okay? Meaning to bounce off of it. And so what I'm looking for is, I mean, we're in an uptrend. You know, we already had that going on. Obviously, you were in an uptrend all day yesterday. A little bit of chop, and then it pulls up. So you saw the pullback, and you said you were waiting for, what were you waiting for to get in? What was your...
Well, I thought it would pull back, and I was looking at like a 618 retracement, which would have brought it back further from the high there of the overnight glowbacks. So I was looking probably at more like a 1628.
Okay. All right. So, and that's, I mean, Fibonacci's are awesome. They're very accurate. But one of the things that, probably one of the most powerful levels in indices is going to be your settlement price.
Now, when you say settlement, you're referring to last night's close?
Yeah, I'm actually referring to settlement itself. So not last trade price. Okay. And, and we actually, like, that's actually on the, inside the deviation thing, we actually pull them off the exchange's website. That's where you get them.
Okay.
So if I go to like CME Group, and I go to Globex, and I go over here to Equity Index, and I scroll on down to the S&P, okay? And then from there, I can actually see the settlement prices. So they'll list them. Let's see if they got them under quotes. They've been changing their website up so much lately. Yeah, so under quotes, then there's a settlement tab, okay?
Okay.
And under settlement, then you can see like the last trade price was 1631, but the settlement was actually 1630.75. Sometimes that number is small, like the difference. Sometimes it's exactly the same, and I mean I've literally seen it like a couple points difference. Okay, and what settlement is, I'll show you. I have an illustration inside the members area here. So right here at the bottom. And the reason settlement is so important is this is what they base, like options being in the money for settlement. It's how they base the mark to market. It's I mean, there are so many financial things that center around settlement, and so that number is more important than what's on your chart. And your chart could even vary a little bit because I mean, just think of the milliseconds.
Right.
My close and your close could be a little bit different, you know. So by a tick or two or three or whatever. And imagine if you're on an option or mark to market, you have a big position. Sometimes a few ticks makes a big difference. And so looking at this right here, what we like, this example shows like the last 30 seconds. So from 4:14:30, Eastern time. So basically 4 o'clock, 14 minutes and 30 seconds to 4 o'clock and 15 minutes. Those last 30 seconds of trading, what the CME does is they take all of the prices that the S&P has traded at in those last 30 seconds. They then take the volume of every price it's traded at that price. So let's say 1,400 on here, and I said like 7,000 contracts were filled at 1,400 in the last 30 seconds. Okay.
Right.
And they multiply that number. They basically give that price a weighted value based on volume. So 1,400 times 7,000 is 9,800,000. They do that on every single price, and then they get the sum of the weighted value. So if I add all these numbers together, and they divide it by all the volume that happened in the last 30 seconds. And that total number becomes the official settlement price. So, I mean, like, pivots, like traders pivots, floor pivots, things like that. You've seen those before, I'm sure.
Yeah.
If they're not based on settlement, they're not accurate. They should always be based on a settlement price. Okay?
Okay.
If they're based on last close and things like that. And like I said, sometimes it makes a big difference. Sometimes it doesn't make a difference at all. Russell, it can be really crazy. But you want that sum of weighted value. Now, what we do, because it's a pain to go to the websites every morning and pull that out, is I actually have it pull it off of the exchange servers every night and post it inside here. So, like, what it'll show is settlement right there. So, like, 1630, it has, all the different things in there that you need to be able to get it. And
Now,
so, go ahead.
You said earlier you expected a bounce off the settlement. Did you expect a bounce to the deviation level, or did you just expect a bounce and you were just going to take that for a short trade and you trailed your stop up?
Yeah, most of my trades, especially because I trade the spreads a lot, I use trailing stops.
Right.
Okay. So now I have like some sort of expectation. Like at a certain point, I start losing expectations of movement. Like at one deviation, there's only a 30% chance the market's really going to exceed that level. Okay. So I'm not looking to buy in again like up here. So I mean that would be an official entry the way that I trade. And I have another one right here where I could add in, and there's another one like working on setting up right now. But notice, I mean, the market just went pretty much flat. I mean, it may roar up another 10 points or whatever, but I mean, it basically went flat after it hit that one deviation. There's not a lot of volume with that was the expectation. So a lot of the algos and firms and everything that are using implied volatility to determine expectations, they're cutting off when it gets to these points. So unless some sort of news item comes out that pushes them further. And so what I'm doing is when it hits the deviation levels, that now becomes a trailing stop trigger event. Okay, meaning now I need to move my stop up. And I prefer to wait until it actually closes above a deviation. So the first deviation that we had on the S&P this morning was 1637.5. And so as you can see, like this bar right here closed at 1638.75. The bar before that closed right at the deviation. Again, I like it to close above it. Okay?
Right.
So since this bar closes above the deviation, then I want to put my stop. I use 5 ticks. It seems to work very well on almost every market I trade. And, you know, out of a dozen different markets I trade, 5 ticks across the board. It's simple, it's easy, and it works. But 1638.75, so it'd put me like at 1637, you know, 0.5. Or sorry, let's see, low 1637.5. So yeah, 5 ticks below that, ticking in quarters is going to put me at 1636.25. So right, you know, there is going to be where my stop's going to be. Okay, and then it closes above another deviation. So I got in, you know, basically on the 3-tick breakout here. So if we want to, you know, draw the arrow type thing, so I got in like right here. So now at least I've locked in my profit. I can't lose at this point. If it hits that level, I'm getting out.
Right.
This bar then closes above the deviation. So I put it 5 ticks. I trail my stop up 5 ticks below. Then this bar closes above the deviation. So now I trail my stop up from here to this point. And then I had an RSI divergence kick in as well. But just to, you know, stick on the same topic, as it closed above the deviation level, moved it up each time, and now, you know, I have a stop here that's, let's see, a low 1643, so 1642, 1641.75 is basically where I have my exit at right now. And then right here, 3 ticks above the high, so 1633, 1632, yeah, actually 1633 to the dot. So, you know, locked in, you know, decent 7-8 pip, you know, points of profit. But I still have room to let it run. And I think that's one of the hardest things as traders is, you know, we're so happy to finally have a profitable trade that, you know, we don't want to give it back. You know, we don't want that winner turning into a loser. It's so annoying.
Sure.
And that's why it's so easy to cut our profits short and not let them run.
Do you also have a limit that you can set this at? So if you walk away and it hits it, you're out? And do you move that up as well, or is that just set on the Nadex platform automatically?
You can set a limit take profit. So you could set one like up at 1644 and walk away, or 1650 and walk away. You can set so a limit being at this price or better.
Right.
Okay. Because if I go in and sell at, you know, 1642 or better right now, it's going to instantly get me out because 1646 is obviously a lot better price to sell at than 1642.
Right.
Because you always want to sell higher. So all the orders on Nadex are limit-based orders. So now I trail my stops, which means I got to do an extra step, right?
Okay.
And so either I need to be comfortable with the risk, or, you know, now you can also add in spreads or binaries to hedge off. You know, if you have to walk away to protect some of your profit, there's different, you know, ways to do it.
So what was your initial risk on that trade then?
My initial risk on the trade. Let's see. I could actually see if I can pull up. I'd have to really dig into it, but let me see here. I can tell you exactly what it'd be as far as
or when you were looking at it, if you remember.
So right here at 1633, and then 5 ticks below the low of here, 1629.75. So about 4 points of risk. So that'd been $40 on one spread, $200 on 5, you know, to equal like an ES. So about $200 of risk on the trade, and then, you know, we're up. Right now with the, you know, not counting this stop, just looking at this stop right here, 1642. So we're up 9 points. So we're at 450 on a $200 risk. And that's where the stop, that's if I get stopped out. So I'm actually, you know, add 4 points to that for the live trade. So we're up about 13 points right now on a 4-point risk. So we're doing really good. Just using the simple method. So, but it basically, I found it's a very objective method. And the way I actually discovered it, because I used to use the deviations for a lot of different things. And it's actually this show is the reason I discovered it, because I call out the deviation levels every day.
Right.
And I had my 10-minute charts up, and I was flipping through them over and over and over. And you stare at something enough, you know, day after day after day for months. And I'm like, wow, every time it seems to close above it, when it goes back below it, it usually just chops or reverses. Rarely does it just continue on in the trend. And, you know, if it does, I have another entry, whatever. But it's like, that's a really good point to put a trailing stop at. And I noticed it didn't like go above it and come down and go, like, if it may chop once or twice, but it's not going to chop like all the way up. And so it really gave me room to let my profits run. It gave me an objective method. And I mean, that's one of the most important things in trading is that you have an objective trailing stop method. Because if you don't, then you're going to be looking at your P&L, and that's going to be your trailing stop method. You know, so you see all that green, you're like, I got to take it, you know. And you
Right,
can leave.
right.
I mean, you can just leave a ton on the table. I mean, you get up here, and I mean, you're up, 10 points on the S&P. Do you get out right now? Yeah. Well, why? I mean, what if it moves up 15 or 20 or 30? So, but where do you put that stop at? If you're not going to take it off, you have to answer the question, well, when am I going to take it off? And so that's where the deviation levels come in. And then as far as execution, so how do I execute a stop on Nadex? So once I've figured out that level over here, then I'll put it like 15 ticks below. And again, ES ticks in 0.1 on Nadex. So
Right.
like the full size, S&P on the floor. And so I'll put it like 15 ticks below that. The reason I'm doing it is, remember, this is a limit order. It's an at this price or better. And what I don't want to happen is it to come down and hit my trailing stop, and then I go to hit place order, and then all of a sudden it goes into working order because it's a limit order at this price or better. And it's already below my price, right? Or, I have to I have to update the price and click place order, whatever. I have it ready. So it's already filled in. And just for example right now, like you can see the market is at 1645.9. I have it priced at 1640.02. If I hit submit now, and we'll actually look at the Nadex platform, it'll fill me up here at 1645.9. So, I got to get rid of the 0.2 on there. Let's see. Okay. All right, so let me get rid of that. Yeah, don't have that in there. And then so I'll hit place order, so 1645.9 or 0.7, wherever the market's at that second. So there we go. So we submitted at 1640.2, right? You can see it right there?
Uh-huh.
The market's at 1645.7. Let's see what price we actually got filled at. And bring that screen back up here to the top. There we go. Over here. And then I'll go to my order history. And then you'll see right here, 1645.7. So we got filled at, even though we sit it at 1640.2, it was at this price or better. So we got filled at, again, a better price. So
Right.
that's why I use it that way, because it's a way to simulate a stop market entry or stop market, exit order on Nadex. So while I'm sitting there, while I'm trading, and if I have to walk away, I'm either going to take my profit, or I'm going to take part of my profit, or I'm going to set a limit exit, So I may set an exit to, hey, if it hits 16, 48,
Right.
40, whatever, then I'm happy with that. I'm okay with that. I'll get out. So now if I'm up a lot, I'm not going to walk away. I'm either going to take my profit or, but I mean, if it's up maybe a point, something's coming up and I'm okay with my risk, then I could walk away and do that. And depending upon what spread you trade, you don't have to have an incredible amount of risk. And in certain trades, you don't even have to worry about a stop loss because, if you choose, depending upon what spread, like I said, you choose, you may not have to get out anyway. Because if you have, say, 4 points of risk and there's, 40 points of risk in the entire spread, well, it could go against you all day long. You're still going to be down $40 and come back in your favor, and you could actually still be profitable.
I gotcha.
So how much of all that, because I know that was still a lot, how much of all that did you pick up on the...
Well, you answered my question, which was kind of how you entered and what your risk was and how you stayed in the trade, which was what I was really calling about. You gave me a whole lot more information than I asked for, but that was great. I appreciate it.
You bet. All right. Well, thank you so much for calling in.
Thanks. Bye-bye.
Amen. Bye. I'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So it looks like S&P is starting to pull back a little bit, and starting to pull back right down to that deviation level. We'll see if it busts on through it. And but this trade is about done, and can almost call it a day. So we got right here, now the other one, we just got wrapped up talking about, how to trail your stops using the deviation levels. Now we're talking about how, I'm going to go ahead and just re-summarize this, how to trail your stop using the RSI divergence. So when I'm looking for an RSI divergence, the only time I even care, okay, is when I see a pullback. So you have a high, pulls back, and makes a new high, like in the current trend. So when I see this pattern right here, and we have a bunch of them, it pulls back, it makes a new high. It pulls back, it makes a new high. It pulls back, makes a new high. Okay, so that whole buy on the dip, sell on the rally thing. So there's a little dip right here, and then a new high. So when that new high is made, from that first bar to the last bar of the high, then I go down here, and from the same point on the RSI, I draw them and see if there's a divergence. Okay? If there is, then I know that there is a decent probability that the market could potentially pull back on me. If it doesn't, I don't care, because I didn't, great, it's going in my favor. If it does, I'm glad I tightened my stop. So right here on the high of this, right there, you're going to see our low, 1644.25, so that puts my stop right at 1643, and we're coming right near that level over here. So again, 1643, and almost out of the trade. So if it hits that, then be calling it a day. So if it breaks that level right there. And again, just one of, I actually have 7 trailing stop methods that I use to help me manage my profit. And so these are 2 of those methods. And if any one of those 7 things happen, I will tighten my stop up. And the deviation one is, I would say, by far probably one of the most generous, most accurate, really gives you room to let your profits run. And it can be tough. I'll warn you. Not that it's tough to do as far as like actually manually do, but I mean it's giving you room to let your profits run. And sometimes while you're waiting, agonizing, for 10, 20, 30 minutes, an hour, to tighten that stop, and could be a painful process, but not giving it that time is when you give back a lot of money to the market. So my goal is to get back a little bit if it comes against me, but get a whole lot more if it doesn't. And I can't manage that emotionally by looking at my P&L. I can't manage it emotionally by, just randomly putting some things on a chart. Like I gotta have this is how I will get out. And I remember a guy teaching on trading a long time ago. He was talking about, you get to choose where you get in. You don't get to choose where you get out. But when you choose where you get out, since you can't choose it exactly, you got to think about it. So don't ever get in until you know where you're going to get out or how you're going to get out. And we talked about whitewater rafting and all that stuff. But what is that? It's like you don't get into the river with your boat on a rapid and go, well, we'll just get out wherever we decide to. You better think about it, because you're going to have a big boat. You may have a big walk back to civilization. What is your plan on getting out? I mean, even though you may not choose the exact spot, you better have a good idea. How do you contact somebody to come pick you up? Are you hiking? Are you going to deflate this entire raft really and carry it how many miles back? So, I mean, you got to think about, how am I going to get out? What am I going to do when I'm ready to get out? What is my plan? Have that plan ready before you get in. Don't start discussing it while you're in the river. Too many things are happening. It's going to mess you up, and you're not going to think clearly. All right, y'all have a great day, and I will see you tomorrow right back here on the Diagnostic Trading Hour. Stay tuned. Dave White coming up next.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.